Alright everyone, what is up? It's Syed Aziba, and welcome back to the channel. Today, we're diving into the top 5 crypto trends that are set to reshape the industry in 2024. These aren't just buzzwords, these are developments with real-world impact. So let's get started. We're not just talking about some fleeting internet fads here. These are seismic shifts, the kind that could genuinely change how we interact with finance, technology, and even everyday assets. I've spent a ton of time sifting through the noise, looking at what the big players are doing, and figuring out what this all means for you, for me, for everyone interested in this space. It's a lot to unpack, but trust me, you're going to want to stick around for this one. We're going to break down exactly what these trends are, why they matter, and who the key movers and shakers are. Think of this as your insider guide to navigating the crypto landscape this year. Forget the get-rich-quick schemes and the overhyped projects with no substance. We're focusing on tangible developments, things with actual utility and the potential for long-term growth. From Wall Street giants finally jumping into Bitcoin in a big way, to your real estate potentially living on the blockchain, the game is changing fast. We'll cover how these changes could affect your investments, your understanding of digital assets, and even the broader economy. So, grab a coffee, get comfortable, because we're about to explore some seriously fascinating stuff. We'll look at Spot Bitcoin ETFs and the institutional money pouring in, the tokenization of real-world assets making illiquid things liquid, the rise of modular blockchains promising to finally scale crypto, the powerful synergy between decentralized infrastructure and AI, and of course the ever-looming presence of regulation and central bank digital currencies. It's a packed agenda, but by the end of this, you'll have a much clearer picture of where crypto is heading in 2024 and beyond. Let's get into it. Alright, first up, let's talk about something that's been an absolute game-changer: Spot Bitcoin ETFs. For years, people in the crypto space have been waiting for this, and in early 2024, it finally happened. The SEC gave the green light, and boom, the floodgates for institutional money just swung wide open. We're talking about massive, traditional finance players like BlackRock, the world's largest asset manager, and Fidelity, another household name in investing, launching their own Bitcoin ETFs. This isn't just a small step, it's a giant leap for crypto's legitimacy. It means that everyday investors, through their regular brokerage accounts, can now get exposure to Bitcoin without the hassle of setting up crypto wallets or dealing with exchanges directly. It's Bitcoin made easy, and that's huge. Think about what this means. Before, if a big pension fund or an endowment wanted to invest in Bitcoin, it was a complicated, often regulatory gray process. Now, they can just buy shares of an ETF, managed by names they already trust. This has unlocked potentially trillions of dollars in capital that was previously sitting on the sidelines. We've already seen billions flow into these ETFs in a very short period. It's a clear signal that Bitcoin is no longer just a niche asset for tech enthusiasts. It's being recognized as a legitimate investment class by the biggest financial institutions on the planet. This kind of adoption is what many have predicted would be the catalyst for the next major wave of growth in the crypto market. So, what's the real impact here, beyond just numbers on a screen? Well, for one, it brings a new level of stability and maturity to the Bitcoin market. With more institutional involvement, we might see less of the wild volatility that crypto has been known for, though, let's be real, it's still crypto. More importantly, it provides a much safer and more regulated way for the average person to get involved. This isn't financial advice, of course, but the ease of access and the stamp of approval from giants like BlackRock and Fidelity are undeniably drawing in a whole new demographic of investors. This trend is absolutely fundamental to understanding where crypto is heading. Next up, let's dive into something called real-world asset tokenization, or RWAs. Now, this might sound super technical, but the concept is actually pretty straightforward and incredibly powerful. We're talking about taking traditional, often illiquid assets, things like real estate, bonds, private equity, even art or collectibles, and representing them as digital tokens on a blockchain. Imagine being able to buy a fraction of a commercial real estate property as easily as you buy a stock, or getting a loan backed by a piece of a fine art painting. That's the promise of RWA tokenization. It's about bridging the gap between the old world of finance and the new world of decentralized technology. Companies like Ondo Finance are making serious waves here by tokenizing things like US Treasuries, allowing people in the crypto space to access yields from traditional financial instruments. And then you have projects like Chainlink, which are crucial for providing the secure data feeds needed to connect these on-chain tokens with their off-chain real-world values. This isn't just about creating new speculative assets, it's about unlocking liquidity for assets that are currently very hard to trade, making markets more efficient, and providing new investment opportunities. Think about the trillions of dollars locked up in real estate globally. Tokenization could make a small piece of that accessible to a much wider range of investors. The potential benefits are massive increased liquidity, greater transparency because transactions are on a public ledger, faster settlement times, and lower transaction costs by cutting out intermediaries. Of course, there are challenges too, like regulatory hurdles, ensuring the tokens are actually backed by the real assets, and standardizing how all this works. But the momentum is undeniable. Major banks and financial institutions are actively exploring this space because they see the potential to revolutionize how assets are managed and traded. This trend is about making finance more accessible, more efficient, and more transparent, and it's definitely one to watch closely in 2024. Chapter 3. Modular Blockchains, Crypto's Quest for Speed and Lower Fees. Okay, let's shift gears and talk about the plumbing of the crypto world. Modular blockchain ecosystems. For the longest time, one of the biggest criticisms of blockchains like Ethereum has been scalability. They can get slow and expensive, especially when a lot of people are trying to use them. Think of it like a single highway trying to handle all the traffic for a giant city. Modular blockchains are like saying, hey, instead of one giant overburdened highway, let's build specialized roads and express lanes. The idea is to break down the core functions of a blockchain, like execution, settlement, data availability, and consensus, into separate specialized layers. This is where Layer 2 solutions, or L2S, come into play, especially for Ethereum. Projects like Arbitrum and zkSync are prime examples. They operate on top of Ethereum, handling a lot of the transaction processing off the main chain, which makes things much faster and way cheaper. Then they bundle these transactions up and settle them back on the Ethereum mainnet, inheriting its security. It's like having a super efficient side road that periodically merges its traffic smoothly onto the main highway. This approach allows the main blockchain to focus on what it does best, like security and decentralization, while the L2S handle the high throughput demands. But it doesn't stop there. We're also seeing the rise of specialized data availability layers, like Celestia and IGNDA. These projects focus solely on making sure that transaction data is available and verifiable, which is a crucial but often resource-intensive part of how blockchains work. By offloading this task to a dedicated layer, other blockchains can become even more efficient and scalable. The whole concept of modularity is about specialization and interoperability. Instead of one monolithic chain trying to do everything, you have a network of interconnected specialized chains, each optimized for a specific task. This is a massive step towards making crypto applications as fast and user-friendly as the web apps we use every day. Chapter 4. DePIN and AI, the next big tech power couple. Now for a trend that's sitting right at the intersection of two of the hottest tech sectors right now, DePIN and AI. DePIN stands for Decentralized Physical Infrastructure Networks. It's a bit of a mouthful, but the core idea is to use crypto incentives to build and operate real-world physical infrastructure in a decentralized way. Think things like wireless networks, cloud storage, sensor networks, and crucially for this discussion, compute power. And when you talk about compute power, you immediately think of AI, which is incredibly hungry for it. This is where the synergy comes in, and it's incredibly exciting. AI development, especially training large models, requires massive amounts of computational resources. Right now, that's largely controlled by a few big tech companies. DePIN projects are aiming to democratize access to this by creating decentralized marketplaces for compute power. Projects like Filecoin, for example, created a decentralized storage network, and now we're seeing projects like Render Network, which provides a decentralized GPU rendering platform, increasingly being utilized for AI compute tasks. Imagine a global, distributed network of computers, from individual GPUs to larger setups, all contributing their power to train AI models or run AI applications, with participants earning crypto for their contributions. This isn't just a theoretical concept, it's starting to happen. The potential benefits are huge. It could drastically lower the cost of AI development, make high-performance computing accessible to more people and smaller companies, and create a more resilient and censorship-resistant infrastructure for AI. Plus, DePIN can also help with the data side of AI, providing decentralized networks for collecting, storing, and managing the vast data sets that AI models need to learn. The combination of AI's insatiable demand for resources and DePIN's ability to provide those resources in a decentralized, efficient, and incentivized way could be one of the most transformative tech developments of the next few years. This is definitely an area I'm keeping a very close eye on. Chapter 5. Regulations and CBDCs, the long arm of the law, and central banks. Finally, let's talk about something that's always looming in the background but is becoming increasingly front and center: regulatory clarity and central bank digital currencies, or CBDCs. For crypto to truly go mainstream, it needs clear rules of the road. For a long time, the regulatory landscape has been a bit like the Wild West, with different countries taking different approaches, creating a lot of uncertainty for businesses and investors. But that's starting to change, and 2024 is shaping up to be a pivotal year for crypto regulation globally. We're seeing a push for more comprehensive frameworks. In the European Union, for example, they've introduced MiCA, which stands for Markets and Crypto Assets Regulation. This is one of the first major comprehensive regulatory frameworks for crypto, covering things like stablecoins, crypto asset service providers, and market abuse. It aims to provide legal certainty and consumer protection, which could foster more innovation and adoption in the long run. Meanwhile, in the United States, the debate continues. There are ongoing discussions in Congress and among regulators like the SEC and CFTC about how to classify and regulate different types of crypto assets. While it's been a slow process, the pressure is mounting to establish clear guidelines. And then there are CBDCs. These are digital versions of a country's fiat currency, issued and backed by the central bank. Many countries around the world, including major economies, are actively piloting or researching CBDCs. The motivations vary. Some see it as a way to improve payment systems, enhance financial inclusion, or even compete with private cryptocurrencies. While CBDCs are very different from decentralized cryptocurrencies like Bitcoin, their development and potential rollout could have significant implications for the existing crypto ecosystem and the future of money itself. How these regulatory trends and CBDC experiments play out will be absolutely crucial for the direction crypto takes in the coming years. It's a complex and evolving picture, but one that no one in this space can afford to ignore. Chapter 6. Wrapping up 2024's crypto game changers and your chance to win. So, there you have it, a deep dive into 5 massive crypto trends that are really shaping 2024 and beyond. From the institutional embrace of Bitcoin through ETFs, to tokenizing real-world assets, making blockchains faster and cheaper with modular designs, the powerful combination of DePIN and AI, and the evolving regulatory landscape with CBDCs on the horizon. It's clear that the crypto space is maturing and expanding in some incredibly significant ways. These aren't just abstract ideas, they represent real innovation with the potential to impact many aspects of our financial and digital lives. It's a lot to take in, I know, but hopefully this breakdown gives you a much clearer picture of the key developments. It's an exciting time to be involved in or observing the crypto industry. Yes, there are still challenges and uncertainties, as with any new technology, but the underlying innovation and the drive to build a more efficient, transparent, and accessible financial system are undeniable. Understanding these trends is crucial. Whether you're an investor, a builder, or just someone curious about the future of technology and finance, keep learning, stay critical, and always do your own research before making any decisions. The landscape changes fast, so staying informed is your best tool. That's it for today's video. If you found this deep dive into the latest crypto trends insightful, make sure to hit the like button and subscribe to the channel. It really helps us out and ensures you don't miss future updates. And don't forget to participate in our 100 Solana coins giveaway. Details on how to enter are in the description below. You definitely don't want to miss out on that. Thanks so much for watching, I really appreciate your time. Until next time, keep exploring the world of crypto.